Thank you, Mr. Chairman. I have significant concerns with the three pieces of legislation this committee will consider today. I want to thank you for responding to the calls of this committee's Democrats and finally making the renewal of the Terrorism Risk Insurance Act a priority. TRIA was signed into law by President Bush in the aftermath of the 9/11 attacks. During a time of uncertainty, it ensured that our largest venues, attractions, and businesses could get back to work quickly and affordably. Post 9/11, the mere threat of terrorism caused many insurers and reinsurers to back out of the market or raise premiums to a level that was prohibitively expensive. In its current form, TRIA keeps terrorism coverage affordable and available by creating a limited federal backstop in the event of a tragic attack. For months, Democrats have been trying to impress upon the majority the importance of the TRIA program, underscoring the need for a quick, clean reauthorization to provide certainty to many of our nation's largest job creators. At a panel discussion I held in January, the consensus was unanimous. TRIA is a resounding success that policyholders depend on. The panelists all urged Congress to enact a long-term reauthorization of the program without changes. Mr. Chairman, it's worth noting that 8 Republicans on this committee agree, co-sponsoring legislation to renew TRIA cleanly and for the long term. Under pressure to put forth a plan, several weeks ago, Subcommittee Chairman Neugebauer released an outline of a plan to radically remake the program. This proposal, aptly known as the TRIM Act, was completely untenable. After its release, concerns by policyholders, industry stakeholders, and Democratic members of this committee sparked improvements to that proposal, and it is now known as the TRIA Reform Act. But while the proposal we consider today has come a long way from those initial drafts, I join with lawmakers, policyholders, and insurers in continuing to express serious concerns. I'm disappointed that Republicans would not work with us to make changes that would have made this mark up a bipartisan one. In its current form, I believe that, like TRIM, this bill will jeopardize a program that has created jobs, spurred economic growth, and protects our nation's economy from the cost of a terrorist attack. Mr. Chairman, to use a phrase you often are very fond of using, this bill picks winners and losers. I say that for several reasons. First, this proposal arbitrarily bifurcates types of terrorist attacks, forcing insurers to pay significantly more should an attack be of conventional means rather than one that is nuclear, chemical, biological, or radiological. Terrorism is an international act carried out with the explicit intention of maximizing damage, loss of life, and economic disruption. I, for one, do not understand why the manner in which an attack is conducted should lead to a significantly higher program trigger and a more expensive copay. It is short-sighted, doesn't make good sense, and it's bad policy. The second way this legislation picks winners and losers is through changes to policies that would hurt our smallest insurers. The bill allows insurers to voluntarily opt out of TRIA's mandatory requirement that in instances of financial hardship, but in actuality, this means large insurers will either be forced to fill in the gaps in coverage, increasing the concentration of risk, or capacity will be reduced and take-up rates will suffer. This bill punishes small, regional, and niche insurers and contradicts one of the fundamental purposes of TRIA, to make terrorism coverage mandatory and available. Mr. Chairman, these are just some of the many concerns I have with the TRIA Reform Act's modification to this successful program. I'm also concerned with the bill's dramatic changes to the Treasury's recoupment formula and the certification process. As a result, I will be opposing this legislation. We will also consider 2 pieces of legislation that would chip away at one of the centerpieces of Wall Street reform, the Financial Stability Oversight Council, FSOC. As I've said before, the FSOC was created for the express purpose of looking at every aspect of our financial system for possible weaknesses and risks, something that did not happen in the lead up to the crisis. These bills are designed to undercut that process under the guise of transparency and disrupt the FSOC's important work ensuring the stability of the financial system. Mr. Garrett's bill, H.R. 4387, imposes restrictions on the council, politicizes its membership with the inclusion of the regulators, commissioners, and board members, and in what may be considered unconstitutional, gives each member of Congress the right to participate in closed-door meetings. And I understand and I see that my time is up, and so I will not continue with all of the opposition that I have to this legislation. I yield back the balance of my time.